Bindu.
So I think we can start.
Yeah. Okay. So, in the revenue recognition, we are talking about, in the morning, we are talking about long-term construction contract or long-term contract, not necessary construction. Okay. So there are two type of revenue recognition. Okay. You can adopt anyone. Okay. One is basically at point of time, and the second is over the period. Okay. So what is the difference in both the process? At point of time, we recognize profit when the contract completed. Nation, when contract completed. Okay. And in over the period, we generally recognize on part completion. Okay. Part completion. Okay. What we are going to recognize? Profit actually. Profit we are going to recognize on part completion as per the contract. Okay, so that is basically the difference. Okay, so see, say for if you are constructing instead of constructing building, if you are manufacturing machine for your customer. Okay, so in that there may be a two ways the contract may be contract we are going to enter into the contract. One is basically when you are supplying the machine. Supplying machine, okay, you can recognize the profit only a machine reach to the customer. When machine reach to the customer. Machine reach to customer. Okay, so what does it mean? Means in this situation at a point of time, means when the contract completed, okay, you can recognize the profit. In a second case, you can get part payment, depend on the stages, depend on stages, okay, like say for assembly, sorry, first is basically the design, then manufacturing, and last is basically the assembly or commissioning. Okay, so once you finish design process, you can you are eligible to claim some amount, claim amount from customer. Okay, so in that situation, at this place also, at this point of time, you can recognize part profit. Part profit can be recognized. Okay, so that is basically the difference. The same is with manufacturing and same is with assembly and commissioning. Commissioning, when we completed, okay, so then we can recognize the full profit. Okay, so this is basically the scenario. Okay, so there is a two ways. One is basically at point of time and the over the period of time. Okay, at point of time, when we complete the entire machine, commission process completed, at that time we can claim the amount from the customer, and we can recognize the profit. And over the period of time, there may be a certain obligation which we need to fulfill, and again that part obligation we can claim the amount from the customer. Okay, so in that situation, whatever may be the stages we completed, and we can claim the amount at that time, we can recognize the revenue for that portion only. Okay, so that is basically the difference. Any doubt here? You need to be conceptually clear. Any doubt? Anyone has any doubt, not able to understand or something like that? No. Okay, so we can see the example. At a point of time, it is clear. I mean, just like the trading. Okay, we supplied the machine or we hand over the project, and we can claim the amount. But in case of the recognition over the period of time, we need to see this example. Tanner company building a multi-unit residential complex. The entity enters into a contract with customer for a specific unit that is under construction. The contract has the following terms. The customer pays a non-refundable security deposit upon entering the contract. The customer agrees to make the progress payment during construction, and if the construction fails to make the progress payment, customer fails to make the progress payment, the entity has the right to all the consideration in the contract if it complete the unit, and the terms of the contract prevent the entity from directing the unit to the another customer. Okay, one more point we already discussed in the morning. If we are manufacturing machine which you can transfer to other customer, okay, in that situation you cannot recognize the revenue over the period of time. Cannot recognize over the period of time. That you need to keep in mind. Okay, so that condition also you need to keep in mind. Okay, so solution, the performance obligation is satisfied over the time because the unit does not have an alternative future use to the entity, because it cannot be directed to the another customer, because we are building a constructing a building on the land of the customer. Okay, so we cannot divert it. Okay, so that's why there is no alternate use, and the entity's performance creates an asset for the customer, which is controlled by the customer, that we already discussed in the morning. Okay, so I hope you are able to understand. If the customer can start to get the benefit from part obligation, then and only then you can recognize the revenue. Okay. Second point, just as I said, this one keep in mind. If you can transfer the whatever the performance obligation you fulfill to other customer, in that situation also you cannot recognize the partial revenue. Okay. So that you need to keep in mind. So now how we are going to calculation. Okay. The first is basically the input method. Okay. Okay, we will read later on. First, I will explain. See what happened if we enter into the contract with the customer for 10 lakh. Okay, and the estimated, this is basically the sale, and the estimated cost is 8 lakh. Okay, so what is my profit? 2 lakh. Okay, how we are going to bifurcate this? Okay, say for we are going to complete in a 3 years time. Okay, now first year we incurred the cost, that you need to keep in mind. Say for 2,50,000. Okay, 3,50,000 and the 2 lakh. Okay, see, it is clearly mentioned input method. So you need to allocate the revenue or the calculate the percentage completion on the basis of cost incurred, not on the basis of revenue. That you need to keep in mind. Okay, so it is 2,50,000, 3,50,000 and 2 lakh, which include 8 lakh. Okay, so what is my percentage completion in this scenario? Okay, so 2,50,000 divided by 8 lakh. What would be the amount? Hmm? 2,50,000 divided by 8 lakh. So it is roughly 31.25%. Okay, and this is 25%. So remaining is 31.25 minus, plus 25 minus 100. So it is 43.75%. Okay, and accordingly we need to bifurcate the revenue. Okay, so 10 lakh revenue, how we are going to bifurcate? Okay, 10 multiplied by 31.25 percentage. Three lakh 12,500, roughly 4,37,500, and here 2,50,000. Okay, so this is my revenue. Okay, and then whatever may be the amount arises, this is my profit. Are you able to get this? What I did, I consider the total estimated cost incurred till date, and then I calculated the ratio. Okay, and accordingly I derived the revenue. Okay, so this way we are going to calculate. Any doubt here? Okay, input method, I hope you are able to understand what is the input method. You need to consider the estimated cost, okay, and you need to evaluate how much cost you incurred till date. Okay, so this way you need to do it. Okay, so here if you see, So we need to reasonably estimated the profit. If you see this one, okay, reasonably estimated the profitability and provide a reliable measure of progress towards completion. Okay, so how we are going to recognize the revenue? Incurred cost to date, where the total estimated cost based on the most recent cost information. Okay, because see, at this moment I assume everything we can set in a 8 lakh, but originally we estimated 8 lakh, but after 1 year if we come to know it is 9 lakh. Okay, so for second year and third year, you need to consider the total estimated cost of 9 lakh. That also I will explain. Okay, but at this moment, you just need to understand the sales recognition is on the basis of cost incurred to date divided by total estimated cost. Okay, so incurred cost to date bear the total estimated cost that may be indicated by such other measure of progress towards completion appropriate to the work performance. Okay, so on that basis we can recognize what is my percentage completion. Okay, any doubt here? And I will explain this also. Okay, after 1 year, if the cost increase, then what would be the situation that we will discuss. Okay, but at this moment means how we are going to recognize the percentage revenue in percentage completion method. I hope you are clear. Okay, we need to compare the cost incurred till date with like what is my total estimated cost. Okay, and this way we need to evaluate what would be the revenue. Okay, so balance sheet presentation, when long-term construction contract revenue is recognized over time, construction cost and estimated gross profit earned are accumulated in the construction in progress account, and billing on construction are accumulated in the progress billing account. So two words you need to keep in mind. Construction in progress. Okay, this is my just like an inventory, whatever the cost I incurred. Okay, and progress billing account. Okay, this is my liability. Just like an we are recognizing the I mean, if we receive the money in advance. Okay, so it is my liability. Okay, these two words you need to keep in mind: progress billing account and construction in progress account. Okay, so these are basically related to the balance sheet item. Okay, these two account we need to net off what would be the final impact that we need to show in the reporting. Okay, so what happened, just keep in mind, inventory is basically whatever the cost incurred. Okay, billing is basically means the progress billing is basically whatever the billing we did to the customer. Okay, that you need to keep in mind. Okay, so that's why this is an asset. Okay, so we will see that journal entry in detail, but just need to keep in mind these are the asset and liability, contra asset and contra liability, and once we netted that we need to show in the financials. Okay, so that you need to keep in mind. The first thing we need to calculate the percentage completion or the bifurcation of revenue on the basis of cost incurred till date to the total estimated cost. This is the first thing you need to keep in mind. Second thing, there are two accounts which you need to I mean, these are the balance sheet account. Okay, that also you need to keep in mind. One is basically construction in progress. So whatever the cost incurred that we are going to accumulate here, okay, till we pass the property to the customer entire, I mean, or to the like entirely how I can say, transfer the property to the customer. Okay, so whatever may be the cost we are accumulating here, and the progress billing, this is an account, asset account, that also we need to recognize for the whatever the billing we did to the customer. Okay, so this way we need to keep in mind, and then this we need to net against each other, and whatever may be the balance that we need to show in the balance sheet. We will see the detailed journal entry. But just keep in mind construction in progress and progress billing account. Okay, so contract price divided by estimated, this is my total gross profit. Okay, journal entry we will see, but the how we are going to recognize the gross profit. Okay, and the total, then compute the percentage completion. So total cost to till date. Okay, so what is my gross profit earned to earned till date? Step 1 means total gross profit multiplied by step 2 means whatever may be the percentage completion method. Okay, and compute the gross profit earned for the current year, whatever may be the calculation, current year profit, and then you need to deduct whatever may be the balances in last year. See what happened, like if you see this example, so total gross profit is 2 lakh. So 31.25% of 2 lakh, this is my gross profit earned in first year. Okay, so what is that amount? 31.25, sorry, total profit is 2 lakh multiplied by 31.25 percentage. Okay, so it is roughly 25. 31.25 percentage, so it is 28.31. So it is 28 lakh, sorry, 2 lakh, so 28.31. This is my profit for first year. For second year, it is 43.75 plus 31.25. Okay, we need to add together because by second year, it is we completed the work worth 6 lakh. Okay, so 75% we completed. Okay, so 75% of 2 lakh, it is basically 1 lakh 50,000. Okay, this ratio may be something wrong. Okay, so this is 62.5 and 75 is basically 1 lakh 50,000. So first year we need to recognize the revenue of a profit of 62,500. In second year it should be 150 minus 61 62.5 5,000 50,000 because we already recognize here. Okay, any confusion here? I'll explain again. 10 lakh minus 8 lakh, so 2 lakh is my profit. Okay, so first year it is 2.5, 3.5 and remaining 2 lakh. Okay, these are my estimated cost. So if I calculate the percentage completion, so this is basically 31.25. Okay, if I combine this, then it is a 75%. Okay, 75 minus 31.25, it is 43.75%. Okay, for second year, and third year it is 100%, but already 75, so it is basically the 25% completion. Okay, so 31.5% of 2 lakh is basically 62,500. This is my profit for first year. In second year, we completed 75%, so we can recognize 1 point or 62,500. So 150,000 basically. Okay, so out of that 62 we already recognized. So 150 minus 62.5. So whatever may be amount coming, it is basically 150 minus 62.5, so which is 87.5, that we need to recognize here, second year, okay, and the 25, which is basically the 50, okay. So if you add together 62.5 plus 87.5 plus 50, so which is basically 2 lakh rupees. So this way we need to recognize the profit. It is automatically coming, means if we compare the 31.25 percent of the 10 lakh, so it is basically 10 multiplied by 31.25, so it is 3,12,500, okay. So 3,12,500 minus 2,50,000. Okay, so automatically 62.5 will come, and 3.125 minus 2.5, you will get the 62.5. Are you able to understand? And this way we need to calculate the profit. Any doubt here? Anyone has any doubt? So see, this is an important topic, so you can ask the question. Otherwise, I am not able to understand whether you are gaining something or not. And I tell you something, means this is really a difficult topic for the CA student as well. Okay, so I'll revise again with the same numbers. See, total contract price is 10, estimated cost is 8, so 2 is my gross profit. Year 1, year 2, year 3. Okay, so I incurred the cost till year 1 is 2.5. For year 2 is 3.5. So in totality it is 6. Okay, and then the remaining is basically 3 to 6 2 lakh. Okay, so in totality here we completed 8 full. Okay, so accordingly I need to calculate, means 2.5 divide by 8. Okay, so it is 31.25%. Okay, so like if I calculate the 31.25% of 10, so it is 3.125. Okay, that is my revenue. So if I this is my sale, this is my cost, so my profit is basically 62.5 or 0.625, like this. Okay, same here we completed 75%. Okay, so it is 150 minus 3125, so it is 4375, 4.375. Okay, so the profit here we may get 87.5. Okay, so 4.375 minus 3.5, which come to the 87.5, and the same here, the remaining 25%. Okay, so it is 2.5. So profit I will get 50,000, right, like this. And if I add together, then it is a 2 lakh total profit. This is my 8 cost, and this is my 10 the sales value. Are you able to understand? Okay, we need to consider the base cost incurred to the total estimated cost for calculation of the percentage completion method. Clear? Okay. Same way, recognize at a point in time, means after completion of the entire contract. Okay. So tenor company is building a multi-unit, same example, complex. The entity enters into a contract with a customer for a specific unit that is under construction, and the contract has the following terms. The customer pays a deposit upon entering the contract that is refundable if the entity fails to complete the unit in accordance with the contract. The remainder of the purchase price is due on the completion of the unit. So here there is no stage-wise repayment. Okay, payment. Okay, so you can get the down payment, and after that you can get the amount only on completion of the contract. So if the customer default on the contract before the completion, the entity only has the right to retain the deposit. Okay.
Sir, if you can wait for something.
Yeah, no problem.
Yes, everyone, sorry to interrupt like this. but I think there is no use of having the class like this where only the teacher is speaking and none of you are asking anything, okay? If that is the case, sir has got last year's classes recorded. I will send you all the recordings. Very good. You can go through the recording and you can study on your own, okay? That is not the purpose why we are conducting class. We are not mad people here to be here live and sitting in front of you and teaching the class without bothering whether it is Saturday, Sunday, morning, evening. It is not some fun we are getting, okay? It is only for your benefit we are doing this. And none of you are asking one single question, what does it mean then? Then why do you go and join Miles? Miles gives you recorded they don't even ask you to give any questions, they don't even ask any interaction. Please don't interrupt. Don't interrupt. None of you are asking one single question. What is that here for? Then go and join Miles. No, why are you coming here? Just to get a teacher degree. Without any interaction, without any effort from your side.
Sir, I am able to understand everything and
No, that is not the case. You are watching on video, 7 people. How will you know whether in the class also or not? Even though we have given complete instruction to always be on video all the time? Yes or no?
but sir,
Yes or no?
the way to talk with the
Yes or no? Answer me yes or no. Don't be people to talk, okay? Tell me yes or no. Have we told you to be on video all the time? Just single question I'm asking. Have we told you to be on video all the time, yes or no?
Yes, sir.
Then, are you? Have I told you you're on a single question now? So you are not on video?
No.
Then, but why you are teaching here, you are not even asking single question. You are acknowledging whether you are understanding or not. Okay, now you are telling very good, you are understanding very good. But are you trying the fact? No. You are not even telling yes, you are not even telling no. How will you be sure whether you are understanding or not? And if you are so good, you are understanding everything very good. But if you are not understanding, no, that means you can guarantee. Then you are not understanding anything. And even if you are understanding, then you are the confirmation. If you are answering one single thing. So if teaching is sort of teaching mind, but you also know mind skills required sessions. So we are going to require sessions. Then what is the difference? Then go and learn else. What should you come here? The advantage is being there is learning interaction, no? That is what we told when we gave the concept of the course. That is the differentiator which we have.
sir,
And if you don't want to make use of that, if you don't want to make use of the differentiator, then go to my, we are not coming now. Yes?
sorry, sir.
But if you are there in our class, then please be interactive. I cannot have a session like that. Sir is teaching and none of you are asking even single thing, none of you are on video, that is not acceptable.
Yes.
This is the last time I am making it clear to all of you. Please be like PDDM students, okay? You are not studying like just for passports. This is a PDDM class. We are different. We are having that electricity background. Yes, you have to behave like a student here. Yes, you are not coming just for a government course, just studying up for computer part. That is not the reason for doing PDDM. If that is your understanding of PDDM, then please begin the course. Okay, I don't have any problem. I have run the program with 3 students also. Sir was only teaching that time also. We have run the program even with 3 students, okay? So we don't have the program of keeping students, we don't want 100 students. We want dedicated students. Yes? Last time I'm telling, please be on video, all of you. Sorry, sir, please continue.
Yeah, no problem. Okay, so again, are you able to understand over the period of time, how we are going to recognize the revenue, or any difficulty, or not able to understand?
Understood, sir.
Yeah, okay.
And getting
Sir, but in the book there's not given any other example, no sir, for like numericals
Yeah,
for
so
this.
in book there is no much example, but as I said, I will take I mean, so one example we already discussed, and the one example we will discuss when the cost get changed over the period. Okay, so that I will discuss with you. Okay, so in the
Sir,
book,
but will it be tested in the exam like?
yeah. It is get tested. So it is not like this. It is not get tested. So when we solve the question answer, okay, at that time we will do
Sumit sir.
one or two more example. Yeah. Yes.
Sumit sir, can we talk about the behavior of sir?
Talk about.
So Dipta sir, please.
So again. Yeah. Can you
We
repeat?
don't misbehave.
Can you repeat?
So Dipta sir,
Yeah, tell me.
yes sir.
Yeah, tell me.
So Dipta sir, we never misbehave.
No, I'm not talking about behavior. I'm talking about response in the class. I'm not at all talking about behavior. I am never. I didn't even ask about behavior. I have response in the class. Because the class is of students, students should behave like students. Students should be interested in learning the concept. They should be interested in asking the questions. None of you are even asking questions. None of you are even confirming whether you understand or not.
Dipta
That
sir,
is what I told.
Dipta sir.
Yeah, please let the class continue. This is I have told and I guess even sir will agree whatever I have told is correct. Yeah. So please continue.
Okay.
Yeah. Okay. So at point in time. Second step. So here what happened, what is the difference? The contractual agreement in a second case means at a point in time, you can claim the amount from your customer only on completion. Okay, so that is the difference. When I mean, you need to know which method you need to apply when. Okay, so if you have a right to claim the amount from the customer stage wise, then you need to recognize the revenue as per the over a period of time. And if you can claim the amount from customer only on transfer or the completion of the project, then you need to recognize the revenue and profitability at a point in time. Okay, so like in this question, the solution given, this is a performance obligation satisfied at a point in time because the customer does not control the unit as it is created and the entity does not have an enforceable right to payment for performance completed to date. Okay, so this way you need to keep in mind. Okay, I'll give one in a practical situation means when you are when the building construction is possible on the land of the customer. Okay, but when you are manufacturing a machine for the customer. Okay, so in that situation, as I said, means there are three stages. One is basically the design. Second is manufacturing, and third is commissioning. Okay, so practically means if you see any manufacturing company, design means drawings which we handed over to customer. Okay, so even though customer is not getting the machine, but whatever may be the design, that document is with him. So again, there is a I mean the customer has a control over the design. Okay, manufacturing you can recognize when you supply the machine to customer. Okay, so here also if you see to customer. Okay, so here also customer is getting a control over the material which we use in the machine. Okay, so this is one, and the commissioning and installation that we generally do at customer site. Customer side. Okay, so if you see in all the stages, means the word which is given here, the customer should have a possession of the property. So in all these stages, the customer is getting a possession, and then we have an enforceable right. Okay, sometime we may ask the advance payment. So that is basically terms of the contract. This will not affect to the recognition. Like before supply, the terms of the contract may be like this: before supply we need to get the money. Okay, so in that situation, because of just we are getting an advance money against the supply, that will not affect the revenue recognition aspect. Okay, so that you need to keep in mind. So 2 point you just need to understand here. Like the customer, you should have an enforceable right to claim the part payment, and the control of the property or the control of the material or the unit is with the customer. If both the condition get satisfied, then and only then you need to recognize the revenue over a period of time. Okay, and at a point in time when you complete the project, at that time you can recognize the revenue and the profit. So again, the same thing is in balance sheet presentation. For that also, these two words you need to keep in mind: construction in progress, CIP, I will write here, and the progress in billing. Okay, so here also the same thing. Okay, progress billing, the way we just discussed earlier. Okay, so you need to net off, and then the net amount you need to recognize either asset or liability. Or liability. Okay, this is CIP just like an inventory, so it is an asset, and progress billing is like a current liability, or the way we are getting an advance from the customer, it is like this, so it is liability. Okay, once we net off, means if CIP is greater than PB, so we need to recognize the asset. Okay, and if CIP less than PB, then we need to recognize the liability. We will see all the JVs as well. Any doubt here?
No, sir.
Okay. So then some important point means estimated gross profit is not recognized each period. So we do not require to calculate on completion of the contract, whatever may be the actual gross profit that we can recognize. Okay. And interim balance sheet date, the excess of either the construction in progress account or the progress billing account over the other is classified as a current asset or the current liability, means what we just discussed. Okay. Loss should be recognized in full in the year they are discovered. This point you just need to keep in mind. We will discuss. Okay, an expected loss on the contract is determined by this. Okay, so that I will discuss separately. Okay, before that I will we start a discussion for if the estimated cost get changed, and then I will cover this point. Okay, so we can take this example first, and then the loss point I will cover it. Okay, sell price 4,000, and the total here. If you see the every year estimated cost get changed: 3,000 to 3,200, then 3,200 to 4,200, and 4,200 to 4,300, and they gave the cost incurred to date. Okay, so just that you need to keep in mind. Okay, we go one by one. I am calculating for year one profit. On year one, like total contract price is 4,000. Okay, and estimated cost is 3,000 for year one. Okay, it is total for total contract. Okay, we completed 51, cost incurred to date is 1,500. 1,500 to 3,000, that means we completed 50%. This is clear. What I did here, I compare the 3,000 total estimated cost applicable on a year one and the cost incurred to date 1,500. Okay, so how much I completed? 50%. 50% we have completed. Okay, so my sales basically 2000 and the cost 1500. So profit I need to recognize 500. Clear? This is for year one.
So where is 2000, 1500 and all?
Yeah, 1500 given. This one. Okay. How I calculated 2000? I compare 1500 with 3000. What is my total estimated cost, which is 50%. Okay. So 50% project I completed. So I consider the revenue of 50% of 4000. Clear?
Yes, sir.
Okay. Now we move to the second year. In second year, my revenue as it is, I just need to change this amount. Now it is 3200. Clear? Cost incurred to date, which is including first year. Okay, that is 2400. Clear? So percentage completion is basically 2400 to 3200. Okay, which is roughly how much? 2400 divided by 3200, 75%. Okay, so here I can recognize the revenue of 75% of 4000. Okay, so 75% of 4000 is basically the 3000. Clear? This is my year 1 plus year 2. Okay, 1 plus 2. Okay, so my profit is 600. Clear? So for second year, my revenue is 1000, which I calculated this minus this, 3000 minus 2000, and the cost is 2400 minus 1500, which is 900, and the profit is 100. This is year to date. Out of this we already recognize. Okay, so this I can recognize in a second year. What I did, when I calculate the percentage completion, I have not taken this as a base. I have taken 3200 new estimated cost. Clear? Any doubt here? In first year, my estimated cost is 3000. Okay, so it is a 50% completion. Second year, it is a 3200. Out of that, I incurred 2400. That means I completed 75%. Okay, so up to second year, my revenue recognition is 3000. Okay, so my up to second year, my cost is 6000. Profit is 600. Okay, so for second year, effect is basically 3000 minus 2000, because 2000 we already recognize in year 1. So it is 1000. 1000 we need to recognize in a second year as a sales, and the cost we need to recognize 900, and the profit we need to recognize 100. Clear till now?
Yes, sir.
Okay. Now
Yes, sir.
come to the third year. Okay. In third year, my estimated cost is 4200, which is more than your contract. Clear? Okay. So what I need to do, means the conservative basis of accounting, what they say is, if the estimated cost is more than the whenever you have a estimated loss, that you need to recognize immediately. So in a third year, I need to recognize the loss of 200. Okay, but my cost incurred till date is 3600. So how much percentage I have completed? 3600 divided by 4200, which is 85.71% roughly. Just a minute. Loss. Okay, so we have not come. So here we need to consider okay. So here we need to recognize the loss of 200. Earlier we recognize the loss profit of 600. So in year 3 we need to recognize the loss of 800. This we need to recognize. Okay, they have not given how to calculate the profit actually. They just calculated the loss. Okay, so here you need to recognize the loss of 800. Okay, because the 200 that you need to recognize, your cost is 3600. Okay, so and the 3600 and the 8000 is a loss. So how much revenue you are going to recognize? 2800. Okay, this is basically the calculation. Okay, so here if you see, this is for up to year 3. So your differential amount would be, so there is no recognition of the, because 3000, so 1000 is additional sell, or your sell amount is 2800. You already recognize the 3000. Just a minute. Okay, full amount you need to recognize 200. Ah, sale value 3675%. To again, okay. 600, cost is 4200, which is 75%. 3000. 3800. I'll explain in 2 minutes. Just on it. 1400. 1000. Okay. 800 24. Say like the 3 minus 1400. Minus 1000. So, okay. 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 So see what happened in third year, we are not going to recognize the revenue because it is anyhow the 75%. Okay. So 3000 we already recognize in a prior period in year two. Okay. So like 2000 and 1000. Okay, so that's why there is no separate revenue we need to recognize, but we need to recognize the loss of 800 because the 600 profit which we already earn plus the current year minus 200 losses. Okay, which is basically the total estimated loss. Okay, so my cost of goods sold should be minus 800 like this. Okay, so this way in a current year, this is basically in the third year. Okay, so this will be your entry. Okay, so 3600 that accumulated in a construction in progress, but to the cost of goods sold we need to transfer the 3800 minus 800 amount. Revenue we already created the 3000, so there is no separate revenue we need to recognize. Okay, the only thing is that we need to recognize the entire loss. Okay, so till now we recognize the 600. Okay, the remaining 200 we need to charge off, means by the end of year 3 it is 800 we need to recognize. So I'll just create one more time all the tables. First, we have a 1500 is my cost and the 2000 is my revenue. So it is basically 500. In the second year, it is 3000 year to date and 2400. Okay, so profit is 600. Okay, in the third year, we cannot recognize any revenue. Okay, but my loss is basically minus 200 in this period. Okay, so whatever may be the difference that we need to charge off to cost of goods sold. Okay, so this is basically the 3000 and the 3200. Okay, so remaining amount, I mean, you need to consider the difference. It is 0 here, it is minus 800, and here we need to consider the minus 800 as a loss. This is for year 3. Are you able to understand how I consider the 3000? Because 4200, which is an estimated cost, and incurred to date is 3600. So it is basically the 75%. So revenue of the 4000, 75% revenue of 4000 is again 3000. So in year 3, we cannot recognize any revenue. We just need to recognize the loss. Clear? Any doubt here?
No, sir.
Okay, now in year 4, when the contract is completed, it is 4000. Okay, and the contract amount is 4300. Okay, so loss is minus 300. Out of this, we already recognize minus 200. Okay, so now we need to recognize 100 additional. Up to 3000 we recognize the revenue, so 1000 additional revenue we need to recognize. Okay, and the remaining is basically like 1100 is my cost of goods sold, so I can recognize the additional 100. This is entry for the fourth year. Okay, so this way we need to prepare. Okay, so again I'll explain. In first year, we go with this table. Contract price is 4000. Okay, estimated cost is 3000. Okay, so we expect the profit of 1000. It is total. Okay, in first year we incurred the cost of 1500, so we need to recognize, it is basically the 50% cost. So we need to recognize the revenue of 2000 and the profit is 500. This is first year. Second year accumulated. Okay, so it is basically, I mean, we completed in a second year 3200 and 2400, so it is roughly 75%. Okay, so we need to recognize the revenue of 3000, 75%, and the 2400 cost incurred to date, which is give me a profit of 600. Okay, so individual second year it is 1000 revenue, and 900 is my cost of goods sold and 100 is my profit. Then third year accumulated, what is the situation? We need to recognize the revenue of 3000. Okay, as there is a loss and we need to recognize the loss entirely, so it is basically minus 200. Okay, so my cost of goods sold is 2800, sorry, 3200. Okay, individual third year, there is no recognition of the revenue. Okay, we recognize till now 2400 as a cost of goods sold, so it is 3200, means minus 800 cost of goods sold, so remaining amount is minus 800. That is my loss. Okay, and in year 4, okay, first we need to calculate the accumulated. So here it is simple because the project is complete, 4300, so it is a loss of 300. Okay. Till now we recognize the 3,000 as a revenue. So 1,000 for the year 4 and 4,300 minus 3,200 or 3,000 is my loss. Okay. So 300 is my loss. Out of this already 200 I recovered. So it is 100 and here it is 1,100. This is my cost of goods sold. It is a sales and cost of goods sold. Are you able to clear? So here we need to
So,
always calculate the accumulate first. Yes.
in the third year, the cost incurred to the date, it is 3,200 or 3,600.
Third year cost incurred to date is 3,600, but this we need to inventorize. Okay. So when we study the JV, then at that time you are able to understand. Okay. So whatever may be the cost incurred to date, that is basically the we transfer to the construction in progress account.
Okay.
Okay, so first you just need to understand the mechanism. Means we need to first calculate the accumulated year to date profit, and then differential we need to charge off in a particular period. Okay, and the percentage completion method, you need to use the total estimated cost for a particular period. Means if there is an incremental, then you need to use the incremental one and the cost incurred to date. Okay, so this is basically consolidate plus year 1. In second year, we calculate first the consolidate and we need to calculate the differential and whatever, I mean for a particular period what we are going to charge off, and the same in third year and the same in a fourth year. Okay. Okay. And when we are recognizing at a point in time, so first 2 years we are not recognizing any profit, but when we evaluate that loss is going to be happened, then we need to recognize the loss minus 200 and minus 100. Okay. Now here you can see the JVs. So whenever we incurred the cost, it goes to the construction in progress and the material cash, etc. or vendor. It is like this. Okay, construction in progress. So you need to whatever like in earlier example, whatever may be the cost. Okay, which is for the first year it is 1,500, 2,400, 4,300, and in between here 3,600. So it goes to CIP, cost in progress. Clear? Then account receivable and progress on billing. So whenever we are like raising an invoice, okay. So first year it is basically progress in billing. Account receivable I am not writing here. Okay. In first year we recognize the 2,000. Second year it is 3,000. Third year we have not recognized, and in the fourth year it is 4,000. Okay, so if you see this way, okay, so this is basically the 500 is my liability. Okay, here 2,400 and 3,000, so 600 is my liability. Here there is no such case. Oh, sorry, 3,600 is my asset. Okay, and here, I mean, we need to consider the differential actually, and the 4,000 and 4,300. Okay, so actually here also 3,000 we need. So 600 is my asset. Okay, so here also means we need to close the account, so that's why there is no balances. Okay, that get closed. I mean, we are going to recognize 300 as a losses. Okay, so that you need to keep in mind. Yeah. Okay. Second, cash and account receivable means we are receiving the cash against this invoices, so it is not much important. Now the last one, journal entry to record the estimated gross profit. So cost of long-term construction contract. Okay, this is COGS, construction in progress. This is this amount, and revenue we need to recognize. Okay, so in construction in progress, okay, why this construction in progress? This is basically means this 500 we need to transfer to the CIP. So technically 2000 and 2000 this gets 0. That also you need to keep in mind. Okay, what happened with this JV? Cost of long-term construction contract. Okay, so it is my COGS. So first year we need to consider 1500, and revenue from construction contract is also 200. Okay, so 2000. So difference 500. It goes to CIP. Okay, so it is debit to the CIP. So this will become again 2000. Okay, while closing. So this liability or the asset balance is 0. Are you able to understand this point? We go again from start. Okay, so whenever we purchase the material, it goes to the construction in progress. So which is basically the expenses incurred. When we bill to the customer, this goes to the PIB. This is an liability side. This is an asset side. And when we close, we recognize the profit. Okay, so whatever may be the profit arises, that again goes to the CIP. Okay, so this will become 2000. Okay, so based on the cost to unit total cost loss recognized in full for the period incurred. Okay, so this amount goes to 0. Clear? Any doubt here? Okay, so if you see the note, so CIP include cost incurred and estimated gross profit earned to date. This point. Are you able to understand? So if there is a normal profit, then mostly it is not, I mean, this will give the 0 value. Okay. Sometime what happened, recognizable is 1500, but we may incur additional expenses of 500. Then there may be an asset. Or expenses is less, but we raise the invoice for the full amount. Okay. So then there may be an issue. Are you able to understand again?
Yes, sir.
Okay, so that you need to keep in mind. Second, you do not require to all the journal entries. So just keep in mind, means the rest is more or less easy to understand. The additional concept is basically progress billing on the construction contract and construction in progress. That is an additional concept. So that you need to keep in mind. And the second, the profitability, which we just calculated.
Sir, will this journal entry come in simulations?
No, even in that, no. Okay, but you need to know the journal entry, or you need to memorize the effect actually. The rest is simple, means cash and account receivable, it is a normal. Okay, revenue recognition also, if you see, just you need to keep in mind the difference amount, means the estimated profit goes to the construction in progress. Okay, or this statement, what I mark here, CIP include cost incurred and estimated gross profit earned to date. If you are clear with this concept, then you can easily solve it. Okay, and the second, how we calculate the profit, we just saw. Okay, revenue and the cost you can recognize on the basis of profit. Okay, first you need to calculate year to date, and then you need to calculate for the particular period. If you are able to calculate the profit or loss we need to recognize on the basis of estimation, even though you have not incurred the, like if you see here, this 200 loss, I have not expense out. Okay, but I need to recognize this as a loss. And the second effect of this goes to the construction in progress. Clear? Means if you see this JV, so cost of long-term construction means for the particular third year, okay, cost of long-term construction contract, okay. So this is basically your cost of goods sold, okay. So that you need to mention the 800, okay. Construction in progress, okay. So that is basically your loss, okay. And the revenue from this is also the 800, and the revenue from LT construction contract that you do not require to recognize for third year. Okay, so whatever the profit means, if you see the construction in progress account, okay, so it is basically means over the period it is 3,600, say for. Just uh, 3,000. Just want to explain one thing. Mhm. Okay, just I'll just try to write. Okay, so I just want to highlight one point. Mhm. Yeah, 3,600. Just an imagine. So my cost incurred is 3,600. Okay, so it is basically in CIP account it is 3,600, and then I reverse means I have a profit of 3,600 already accumulated. Okay, but I reverse then minus 800. So that is basically balance of the construction in progress. Okay, so it is basically 2,000. How much? Uh, 3,600 plus 600, 4,200, and minus 800. So it is 400. Again, it comes to the 3,400. Okay, so 3,400 plus 200 is my loss. So it is this way. I means because I make a provision of additional loss of 200, so whatever may be my CIP, that balance goes down to 3,400. Clear on this issue? See how I got this number. After completion of the year 3, my cost incurred to date is 3,600. Okay, but I need to make a additional provision of 200, which I need to credit to the because debit to loss and PNL and credit to CIP account. So my balance should be 3,400. Okay. And if you see by data entry mode, okay, so 3,600 actual cost incurred plus whatever may be the 600 profit I earned, and minus 800 in the current year I charge, I means reverse the amount. Okay. So balance is 3,400. It is in my CIP. Okay. And on that day, my billing is 3,000. So 4,000 is an asset available with me. Are you able to get me?
Yes, sir.
Okay. So this way we need to consider. Okay. Keep in mind CIP and progress billing. Okay. And then the way we calculated the profit. So it is in period of time. I mean, it is a simple construction in progress and progress billing on construction contract. Okay, for the part payment, but we do not require to recognize any revenue. So this entry is not available at the end of the contract. Okay, so like progress billing and construction in progress get nullified at the end of the contract. Okay, in over the period of time, but to close the billing revenue, here we need to recognize the revenue, and whatever may be the amount available to the progress billing, that we need to transfer to revenue, and whatever may be the available in construction in progress, that we need to transfer to cost of LT construction contract, which is just like a COGS. Okay, so it is quite simple. That just, I mean, when you are recognizing the revenue and the profit over a period of time, that is slightly complicated. Okay, but here also you just need to keep in mind 2.1. First, we need to calculate year to date, and then you need to calculate the differential. Okay, second, progress billing is depend on the whatever the invoice we raise to customer. CIP cost incurred plus whatever may be the impact of the gross profit, that you need to mention in the CIP, construction in progress. Okay. Then incremental cost of obtaining contract. Okay, so when there is an incremental cost, okay, means the additional cost we incurred. Okay, so how we are going to deal with this? Okay, so okay, say for what happened, I'll just give an example. You have an order from the customer. Okay, you have an order from the customer. Okay, say for customer gave an order of 10 lakh. Okay, and at that time you estimated the cost is 8 lakh. Okay, now there is an additional cost of, we may require the additional cost of 1 lakh. Okay, because the customer suggests some modification or something like that, there is an incremental cost. Okay, when we are going to incur this cost, we need to evaluate whether this cost is recoverable or non-recoverable. Okay, so recoverable cost, if the cost is recoverable, then you can treat this as an asset. Okay, but if it is a non-recoverable cost, then you need to charge off to P&L immediately. This is basically the incremental cost of obtaining a contract. Okay, so that is basically how I can say the concept. Are you able to understand? Okay, so we decided some contract value on the basis of some value addition, but then there is a request from the customer. Okay, and if the customer expect this request at free of cost, then you need to immediately charge off to the P&L. As we already, as I always says, if there is any additional loss you are anticipating to incur, that you need to charge off immediately. Okay, So we will see the example. A software developer enter into a contract with a customer to transfer a software license, perform installation and provide software update and technical support for 3 years in exchange for 240,000. In order to win this contract, the developer incurred the following cost. Okay, so this is legal fees of drawing up the contract, travel cost to deliver the proposal, and the commission to sales employee. Okay, so here this three costs you need to understand. This 10,000 is basically the legal fees. Okay, so that cost you are going to incur even if you are not getting a contract. The same way, the 20,000 also you are going to incur even if you are not getting a contract. Okay, so this two cost you need to expense out immediately, like this. Okay. Okay, sorry, 10,000. Okay, legal fees maybe if you get the contract, then and only then you need to incur. Okay, this cost we need to incur only if you get the contract, because if you are not getting an order, then you do not require to incur this cost. So that get capitalized. Okay, and the commission, which is 12,000, that is also you need to pay if you get the contract. So that also you can capitalize. Capitalize means you can accumulate in the inventory. Okay, it is not the actual capitalization. It is basically the accumulation in the inventory. So whenever you are going to sell, this inventory cost debit to the P&L account. Okay, so it is anyhow the revenue. Okay, but unless and until you are not selling, okay, you can accumulate as a part of the inventory. Okay, so determine which cost should be recognized as an asset and which should be expense out. So the travel cost 20,000 should be expense because they would have been incurred even if developer did not get the contract. And the legal fees and the sales commission should be recognized as an asset. Asset means inventory, because they are cost of obtaining the contract, assuming that developer expect to recover the cost. So if you are able to recover the cost, then you can inventorize it. If you are not able to recognize the cost, then you need to charge off to P&L account. So that is basically the concept for the incremental cost. Then cost to fulfill a contract. The costs that are incurred to fulfill the contract that are not within the scope of another standard will be recognized an asset if they meet all of the following criteria: relate directly to a contract, such as direct labor, material, allocated cost and other costs that are explicitly chargeable to the customer per the contract, and they generate or enhance the resource of the entity and they are expected to be recovered. The same thing which I just explained means if the customer demand additional support, okay, so in that situation this additional support, okay, you can means whatever the cost you are incurred, this is pertains to this additional support. To this additional support. Additional support. This is the first. Second point, it should enhance the value or the resource of the entity. Okay, so enhance the value. Okay, maybe customer may get some benefit or the supplier or the manufacturing entity get some value. Okay, and the third, we can recover the cost from customer. Then and only then you can inventorize. Otherwise, you need to charge off. It is like this. Okay. So, cost to be expense include selling and general administrative cost, vested labor and material cost, and cost tied to satisfied performance obligation. So that is basically cost to fulfill a contract. So if you are incurring the cost which is required to fulfill the contract, then you can inventorize it. Okay, but other costs which means which is not directly related to the particular contract, okay, that you need to expense out. So there is an example. A software developer enters into a contract with a customer to transfer a software license, perform installation and provide software update and technical support for 3 years in exchange of 240,000. In order to fulfill the technical support portion of the project, the developer purchase an additional workstation for the technical support team for 8,000 and assign one employee to be primarily responsible for providing the technical support of the customer. The employee who also provide service for the other customer, this employee, okay, and the employee is paid 30,000 annually and is expected to spend 10% of his time to support the customer. Okay, so additional workstation we need to recognize as an asset, and the cost of the employee should be recognized as a payroll expenses, because although the costs related to the contract and are expected to be recovered, the employee was already working for the developer, and therefore the cost do not generate or enhance the resource of the developer. Means if it is not the additional amount which we are going to incur, okay, it is basically the allocation. So that's why whatever may be the cost paid to the employee, that we cannot inventorize, that we need to capitalize. But the additional workstation, because it is dedicated for the particular project, okay, so that you need to recognize as an asset. Then contract modification. So if there is any contract modification which represent change in price or scope of the contract which is approved by both the parties, okay, so then you need to consider this as a new contract, okay. So, and that can happen if the scope increases due to addition of the distinct goods or services, and the price increases appropriately reflect the standalone selling price of the additional goods or services. If not accounted for as a new contract, the modification is treated as a part of the existing contract with an adjustment to revenue to reflect the change in the transition price. Okay. So again, this is basically means if there is a modification for which you need to get additional revenue, and you need to incur related cost. Okay, say for earlier you are going to deliver 7 machine and now the customer added 1 more machine. Okay, so this is basically the modification of the contract in the same contract. But if the situation is like you need to deliver the 7 machine, but you need to add some additional capability. Okay, or additional software, I can say. Okay, so this is basically the new contract, means whatever may be the 1 machine contract. But if this is the situation, means you need to work on that 7 machine itself. Okay, so then you need to consider this as a existing contract. Okay, and then whatever may be the additional expenses you need to incur, you need to see whether you can accommodate with the contract price. Okay, or whatever may be the additional amount you are receiving. So that is basically the existing contract price plus additional. Okay, and then you need to see plus additional, and then you need to see that you need to compare with the cost incurred plus additional cost. Okay, so difference is basically if you 7 plus 1 means the earlier you need to deliver the 7 machine and now you need to deliver the 8 machine, then we can say this as a contract modification, and for this one single machine it is considered as a additional contract. But if you just need to add some additional support or additional facility in an existing contract, that you need to consider as a existing contract. Then principal versus agent. So it is clear, means if you are a decision maker, then you are a principal. If you obey the decision of the principal and your support, then it is an agent. Okay. So the entity control the goods or service before it is transferred to the customer, then you are a principal. So when this is the case, revenue recognized is equal to the gross consideration an entity expect to receive. An agent is getting a commission only. So the entity arranges for the other party to provide the goods or services to the customer. So when this is the case, the revenue recognized is equal to the fee or commission for performing the agent function. Okay, so that is quite simple definition. Okay, indicators that entity is an agent and does not control the goods or services before it is provided to the customer, which include another party is primarily responsible for fulfilling the contract, means he is responsible to deliver the goods. Entity does not have inventory risk, means the agent do not have any inventory risk, and the entity does not have discretion in establishing price for the other party's goods or services, means whatever may be the price negotiation, okay, maybe the agent is doing it but with the prior approval of the principal. He do not have a authority to dictate the prices. He may dictate the prices on behalf of the principal, but not on his own. If he is dictating the prices on his own, that means he is responsible for the profit or loss. Okay, and in that situation, he could be the principal. Okay, maybe the distributor kind of principal. Okay, means he is buying a machine from material from the OEM and then he is selling it. Okay, but if he do not have a price discretion, okay, he cannot dictate the prices, then he is act as an agent. So that is basically the principal and agent. So this is one example. On January 1, Anderson Company enters into a contract with the Tanner Company for the sale of excavator with a unique specification. Anderson and Tanner develop the specification and Anderson contract with the construction equipment manufacturer to produce the equipment. The manufacturer will deliver the equipment to Tanner when it is completed. So Anderson agrees to pay manufacturer $350,000 on delivery of the excavator to the Tanner. So Anderson and Tanner agreed to selling price of 385,000, which will be paid by the Tanner to the Anderson, and Anderson's profit is 35,000. So Anderson contract with the Tanner requires Tanner to seek remedy for defect from the manufacturer, but Anderson is responsible for any correction due to the errors in specification. So what is the status of Anderson? Okay, so he is acting as a principal because he is able to determine the or dictate the prices to the customer. Okay, so Anderson is acting as a principal in the contract based on the following indicators. Anderson is responsible for fulfilling the contract because it is responsible for ensuring that the excavator meets specification. Anderson has an inventory risk because it is responsible for correcting error in specification, even though manufacturer has an inventory risk during the production, and Anderson has a discretion in establishing the prices. Okay, so what happened? He is selling to Tanner and he is buying from the manufacturer. Okay, but like if manufacturer supply to the Anderson, okay, and the Tanner is not lifting, okay, so inventory risk is with Anderson. Second point, Anderson able to dictate the prices to the Tanner. Okay, and Anderson is making a profit.
So here, what is the inventory risk he is responsible for?
Okay, so if Tanner is not lifting the machine, so Anderson do not have any remedy that he can return machine to the manufacturer. So inventory risk is with him. If say for before delivery, okay, inventory get damaged or machine get damaged. Okay, so this is basically loss to the Anderson. Okay, see in consignee, if you see consignee holding a good on behalf of the consigner. Okay, but any loss happened even in the when the goods is in custody of consignee, that loss need to be bear by the consigner. So consignee is an agent in that situation. But here what happened, it is a principal to principal contract, and Anderson did contract with the manufacturer for buying a machine and he is reselling it to the Tanner. Okay, so if tenor is not lifting the machine, okay, so then machine is with the Anderson. He cannot return back to the manufacturer. So that's why he is a principal. If like the end customer, in case of the if the Anderson agent is an agent and end customer tenor is not lifting the machine and that loss absorbed by the manufacturer, okay, so then Anderson is a commission agent. Okay. So here Anderson is dictating the prices. Okay, inventory risk is also with the Anderson. Okay, and Anderson need to complete the contract. Okay, if machine is not delivered by the manufacturer, till tenor cannot expect that manufacturer should deliver the machine. He can like enforce the Anderson to deliver the machine. So it is the responsibility of the Anderson to fulfill the contract. Okay, so that's why Anderson is considered as a principal.
He also act like agent also, sir.
No, if see, first point, Anderson is responsible for fulfilling the contract. Okay, if manufacturer is responsible for fulfilling the contract, okay, it is his responsibility to deliver the machine to the tenor. Okay, so then Anderson may be the agent. Okay, here in this situation, tenor enforce the Anderson to deliver the machine. He can buy from the manufacturer X, manufacturer Y, or manufacturer Z. Okay, it is immaterial for the tenor. This is the first point. Second point, if tenor is not lifting the machine, okay, and Anderson have a right to return that machine to the manufacturer, then he may not have an inventory risk. Okay, or any defect or warranty period, if Anderson is going to is responsible, okay, so then he is carrying the inventory risk. Okay, but if he is not responsible for anything related to the product, then he could be an agent. Okay, and the third is discretion of establishing the selling price. Yeah, someone want to say?
So there are three conditions like inventory risk should be bared, and he need to have the control over selling price.
Right. And the third one is he is responsible to fulfill the contract. In agent case, the principal is responsible for fulfill the contract. Agent is just giving an order.
Okay.
Then repurchase agreement. Okay, so this require a time. Okay. Okay. So any doubt till now?
No, sir.
Okay, so one more point from my side. See, like CPA course is not like this. How I can say that you need to like sit for a 3-4 hours in a day and you need to be dedicated. It is because the examination pattern is basically the MCQs. Okay, if you pay proper attention while I am teaching, then you do not require to open even the textbook. You can directly jump to solve the MCQs. Okay, you should have a just a brief idea about the topic, then you can solve the MCQs there, you can get the explanation and you can clarify your doubt on your own. Okay, so that's why I am also suggesting focus on it, try to do a certain discussion so that means you do not require to read the books, you do not require to refer the recorded lectures. This will save your time actually. Okay, so that point also you need to consider. Okay, anyone has any other doubt? Okay, some of you planning to approach me for the like evaluation process. So tomorrow I am available after 7:30. Okay, so you can give me a call after 7:30.
Okay, sir.
Okay, so if you have any point, then we can discuss. Otherwise, we will close the class for today. Okay, so I'll close the class for the today. Thank you everyone. Bye everyone. Good night.
And